is the UR Business Network.
Hi, and welcome to the New York Real Estate Journal radio show. I'm Eric Wilson alongside Rick Kaplan, and today's show is brought to you by the New York Real Estate Journal, bringing together the commercial real estate industry for over 25 years. Find us at NYREJ.com. If you'd like to be a guest or sponsor for the show, call 800-654-4993 or email us at radio@nyrej.com. Again, that's 800-654-4993 or email us at radio@nyrej.com. And we're joined on the phone by Jeffrey Weingart, the Senior Vice President, and Tom Morast, the originator of UC Funds. Thanks for joining us, guys.
Good morning. Thank you for having us.
So, Jeffrey and Tom, could you tell us a little bit about UC Funds and what it is?
Yes, we are a direct balance sheet lender based here in Boston, investing money nationally into commercial real estate.
Okay, so you cover nationally, but you're located here in Boston?
We're based in Boston, but yes, we have huge concentrations of investments in Texas, Georgia, Florida, and your hometown, New York City.
Fantastic. And what size loans do you do?
We're typically investing anywhere from $1 million to $25 million investments.
And is there any? So it has to be, the specific requirement is you have to at least be $1 million.
You know, we are very flexible over here. We can do a lot of different things, but, you know, generally speaking, we are looking for investments from the $1 to $25 million range size.
And how does the market look right now for that?
The market right now for real estate is great. I think probably the most challenging aspect for sponsors right now are finding good deals. There's a plethora of capital out there to finance the deals, as well as equity investors. So we see a lot of activity. We see values, you know, going up from where they are today. We're putting out as much capital today as we possibly can.
Now, you said you're also national. So it's,
yes.
So you fund anywhere in the country. Like if someone is a commercial broker from this area and they have an investor that looking to buy property, Boston, New York, they could lump everything together with you guys?
Correct. We're coast to coast, continental United States.
Now, is that a common thing now? Because I know a lot of property owners that they'll bundle properties, you know, for refinancing or to just get their the loan.
Yeah, you know, I see the real estate market as really becoming more national in focus. You know, as much as it does expand, it's always good to have boots on the ground in certain markets. Tom works for UC Funds. He's actually out of Kansas City. And we've got a few other originators who work for the firm in various markets. But everything's centrally located, the home office in Boston. And, you know, myself and the other senior managers, we've worked together for almost 10 years. Our prior fund, we put out probably about $4 billion nationally. There aren't very many markets in the country that we are not very knowledgeable on and don't have past experience in doing deals in.
So does that set you apart from other lenders, is the fact that you've done past deals as well as you have boots on the ground in most of these markets?
In any market, we're going to run into competition with different lending sources that are homegrown to that market. What I really think separates us than most of the other groups is being able to understand sponsors' visions for the real estate and then being able to capitalize them at a higher proceeds level than most other lenders.
Is there any specific type of commercial properties that you like to invest in or loan money for?
That's funny. That's the same question I was just going to ask too.
Oh, God, we're thinking alike?
We are.
You know, we invest in multifamily and commercial, all product types, from obviously industrial, retail, straight affordable, you know, straight market rate multifamily, affordable multifamily, student housing, 55 and over. self-storage facilities. We'll even do some land investments. So we really cover all the product groups. It's really about finding the right deals, the right sponsorships who can execute on those business plans.
So that brings me back to the first question. A lot of property owners, they like to bundle properties to get the most equity, I guess, from that. Is that something that is still common that is going on today?
When you say bundle properties, trying to combine various properties?
Right. They combine, they might have a portfolio of 10 different properties, and they bundle it as one loan.
We see a lot of that, but I do think that, we're a little bit different than most other shops. We at UC Funds invest in a lot of transitional value-add deals. We'll do, assets that need a little bit of lipstick to those that need gut rehabs and adaptive reuses. So we're taking on a lot of value play sort of transitional real estate, which isn't something you necessarily see in a portfolio. We're more property-centric, understanding what that sponsor is looking for, understanding how they're going to create value, understanding what the exit will be once they get the business plan done.
Mm-hmm. So when you're figuring out a loan, you put all of those those answers you just gave us, put it into play to figure out if that deal makes sense.
From more of an underwriting standpoint, I take what I can get my hands around quickly and efficiently. I throw it into my bucket. I make a decision. Is this something that's worth pursuing? If it is, I'll reach out. I'll get additional diligence from a sponsor, and I'll throw that into my bucket to the point that I'm comfortable. Once we're comfortable, we have a very in-depth screening process for deals that come in the door. It comes to me. I underwrite the deal. If it looks good, I will go to investment committee. I'll get the buy-in from the other committee members, and then we'll finally issue a term sheet to a sponsor.
Now, one of the things I've always wondered about loaning funding to these property owners, if there's a successful property owner, he purchases property, they're always successful. Now he wants to purchase another property. How much effort do you really put into something that he is chosen to purchase in the decision making? Because he is a successful buyer, and he's always been right on the money every time he purchased something. So
who is this, Warren Buffett?
Yeah, so,
I think at the end of the day, we always look at the sponsor. We are an asset-based lender. And we can certainly make deals with sponsors who have taken a black eye, especially those coming through the credit market crunch of 2010. But, ultimately, we're not looking for dreamers. We're looking for guys who have some experience, a track record of success. If somebody's done 15 deals, 14 have been successful, and they got caught in the market with one of those deals, it's easy for us to look past that. But, for somebody who doesn't have the experience in renovating, repositioning, managing assets, that would be a concern to us.
So what is the time frame usually when someone comes and they want to borrow money for a property? Because I know some of these guys, they need that quick turnaround. Is that something that goes on?
Absolutely.
So you can do that for them?
That's, again, you had asked a question of, why do people come to UC Funds? What is your competitive advantage? One, we're typically lending money 75 to 90% loan to cost. We're also playing up and down the capital stack from first mortgage loans through equity. We're also, providing them capital for a lot of deal types that other lenders shy away from.
Now, one of the other things that I've seen in the market in the past, these are all. I wonder how that happens. Questions that I've seen, where there have been people that have owned a lot of commercial property, and every time the market changes, they might have bought it 10 years ago, and every 5 years they try to pull as much equity out of it as possible. I know that the past few years the market has changed a little, so they haven't been able to pull as much equity out of properties. But is that something that you have a regular, or you have regular clients that do?
We certainly have the ability to do it, but more times than not, we typically are a shorter term lender in the 1 to 3 year time frame. We don't see a lot of people coming to us for that type of capital. Mm-hmm. That's typically guys who are taking conventional loans, a little bit lower leverage, where they're trying to pull out as much capital as possible to invest in their next asset.
Right. I have a question.
Our guys, who we typically see, we're giving them very high leverage to begin with on these transactions, and we're looking for them, a lot of times to come in with a little bit of cash with us so that we know that they're fully committed to a deal. Because we see more acquisitions and renovations than we do refinances. 2 years ago, my business was preserving and protecting real estate owners' investments. Today, where the market is, my business seems to be more focused on giving entrepreneurs the capital to grow those portfolios again.
Okay. I know that you at UC Funds went through a branding change fairly recently from UC Funding. Has that affected your business at all?
Yes, it has. Really the change as we've been evolving as a company. We're young, we're still entrepreneurial. We've got a great track record, having done $1 billion worth of business in the last 30 months. But the next sort of growth to our business was really integrating a full-service capital markets team within the company, and was really the biggest, I guess, sort of event that led to the rebranding of the company.
Mm-hmm.
That brings up another question, is that how is the financial loaning money has changed in the past 4 or 5 years?
Yeah, because after 2008, what changed?
Right, because now, the things we went through that period.
Everything.
Yeah. Well, that's why I'm asking the question, because I think there's a lot.
It's actually really interesting that as you look back, to that 2008 to 2011 time frame, we at UC Funds, the company was established in 2010. We were one of the very few lenders in the marketplace. We were getting, great yield at that time because there was no competition. Today, there's a plethora of capital out there. Everybody's chasing deals. Most people are chasing the same deals. The market is very competitive, and the cost of capital is very low to the sponsors.
So you're saying that a lot more companies are coming into the marketplace because of the change in the economy, getting better? The
change in the economy, real estate as an asset class has really gained, notoriety and acceptance. Once the market sort of leveled off and started to move back up, everybody came back into the marketplace. Guys who were on the sidelines watching in 2008, 2009, 2010, and 2011, they all showed it back up in 2012.
And how long do you think, Jeffrey, that this capital is going to be around? Is the market, it can't be forever, much like we have these cyclical recession type ordeals. How long do you think that this money's going to be out?
If I had a crystal ball,
which you do, because I just asked you.
I would be a rich person. But having said that, the typical real estate cycle is 8 years. You expect 8 years of sort of going up, a drop, then another 8 years. Today, where real estate is, it's become an accepted asset class for investments. It's much more liquid than it ever has been in the past. I would anticipate that we're going to steadily increase for the foreseeable future. Any sort of market corrections will really be tied to the general economy as opposed to focused on real estate as an asset class.
Now, investors, wouldn't it be to their benefit to be dealing with a lender that has been around for a little while as opposed to the new guys coming on the block?
You know, what I always try to explain to all my clients is that it isn't about every last dollar in proceeds. It isn't about every last basis point in interest rate. There are two things that people really should focus on. Well, you know, are they dealing with a lender who's going to close their deal? And if the lender closes that deal, are they going to be able to work with that lender afterwards? Those are the two most important things that I see for any sponsor as they're searching for capital out there. A term sheet is a term sheet, but a lender who closes that you can trust, that you can work with, I think that's the most important thing.
Yeah, I would have to agree. Thank you for joining us. I want to ask before we leave, where could someone, an investor or someone else, find more information about UC funds or get in contact with you or Tom?
Okay, perfect. Well, by all means, we have a website out there, ucfunds.com, and it actually gives a great layout of what services we offer, what capital solutions we provide, as well as some direct examples of deals that we have closed. For anybody who wants to talk to someone directly, they can feel free to give me a call, 857-288-2791, or they can contact Tom at 913-526-9276.
Well, and before we go, Tom, I just want to ask you a question because I know you haven't said a whole lot. Originating loans. Originating loans. How's that going?
Tom, you
there? Sure, absolutely.
So, yeah, before we go, what is an originator and how is it originating loans?
Well, basically, my job is to go out and find the sponsors, make sure that they fit our basic, parameters, and do initial screening when they send us a deal. It's not every deal that we can do, and I want to make sure that the sponsors are real guys, they're real people doing real deals, and they have some experience, and have realistic expectations of what we can do. Even though we're can be very creative and entrepreneurial, we still have to have some certain things to get deals done, and I want them to realize that they need to have those things in place, so we can take a good look at them. And also, I deal with a lot of brokers and try to make sure that they know what we do, and make sure that we're in front of them, and when they have a deal in place that might be a good fit, that they send it to me before somebody else.
And when you and Jeffrey mention sponsors, you're talking about the investors that will put the money into this.
Or developers.
We stumped you on that one, huh?
You're looking for me or Tom?
Either one. Yeah, we were asking either one of you guys. So when you have both used the word sponsors throughout the show, and just for the average listener, what does the sponsor actually entail? Is that the investor, is a developer?
Well, and not just the average listener, for myself.
The sponsor is the gentleman who's basically responsible for the transaction. Usually they are both they're an investor in the deal, but they're really the ones who are running the show.
Okay. Well, again,
the other thing that we didn't talk about, and I don't know, if it matters that much to you guys, but we really are, sort of 6 month to 3 year sort of investors. Mm-hmm. We do a lot of value play, transitional real estate, and one of my, I guess best known products in the marketplace is our bridge lending program, where we're providing people typically 75 to 90% plus loan to cost debt, and we're doing it all for a fixed rate of return, no equity participation, non-recourse, which seems to be really well received in the marketplace.
All right. Well, we appreciate you guys coming on and spending a little bit of time and educating us on the financial market and some of the terminology used. And we really appreciate the time. And check out ucfunds.com for more information.
Perfect.
Thank you, guys.
All right. Thank you very much, guys.
And that was
Thank you.
All right.
And
Bye-bye.
that was Jeffrey Weingart and Tom Morast of UC Funds. And that interview was brought to you by the New York Real Estate Journal, bringing together the commercial real estate industry for over 25 years. Find us at NYREJ.com. If you'd like to be a guest or sponsor for the show, call at 800-654-4993 or email us at radio@nyrej.com. Again, that's 800-654-4993 or email us at radio@nyrej.com.